All right. Welcome, everyone, to the late night show. It is Sam coming to you from LA. It is late. It is 10:20 p.m. over here. I usually do it in Eastern time because most people in Eastern time, that's when the market is. So, yada, yada, yada. I'm sure you guys are definitely, definitely not a stranger to what is happening to the market right now. Let me just pull up some stuff over here. So, just to preface, we had more than a few things that happened in the market just now. Trump met with Xi, finally. Everyone's excited. Hooray, hooray. And then, as the market was ripping up, he leaves, gets in his plane, and all these tweets are going around saying, like, wait, there was no press release. This is bearish, right? Market drops like 40 points in a matter of a few seconds. And now, where are we today? Let's check out the charts real quick over here. We got Trading View, and it's loading. Of course, it's loading. Of course, it's taking a while to load while I'm on a live stream at 42 people over here watching. Thank you, everyone, for watching. Really appreciate you guys being here. In case you're watching on Twitter, go ahead to my YouTube channel. I have it on in there. I also have a bunch of videos that I like to record on there as well for your entertainment. I'm going to reopen that thing. I don't know why in the world that did not load. Interesting. Perhaps the market's down so much and it doesn't want to show me. I don't know. We'll see. So what's going on? What's going on with the chat? What's going on with the chat over here? Where's my chat at? What's up, people? West Coast gang, what's going on? West Coast gang, Dodgers are cooked. Yeah, Dodgers are definitely they definitely did not do good tonight. It was 6-1. I was not watching the game today. To be completely honest, I did not want to watch the game today because I wasn't betting on it. But also, I don't know. They're in Toronto, so I figure it's probably going to be like a one-off game or something. That's what it ended up being. Why is this thing not loading? Anyways, what's going on? Can't sleep East Coast. Yeah, crypto dumping. Yeah, crypto is definitely dumping. Fiserv. You know what? We should actually look at Fiserv today. That'll be pretty interesting. He was in Air Force One YouTube while White House had the audio. Interesting. Okay, Dodgers. Yep, of course the Dodgers again. Let's go LA. All right. Hold on a second here. I'm going to open it up on my remote desktop, and then we can look at what is going on with the financial markets from there. Let's see here. Share this. There we go. All right, so what are we looking at over here? Oh, well, it looks like we recovered quite a bit. So this is S&P futures. I don't know if you guys know what the futures are. A lot of you guys probably do. This is basically the equities futures that trades overnight, which is pretty much what the S&P 500 actually tracks. But generally speaking, everything is going to equate back to how the futures are trading in terms of the market. So what are we saying over here? This is the 5-minute chart, and it was pretty interesting because you had like this massive rally into the meeting, and then this just gets dumped up. But it looks like this is getting bought up right now. So the interesting thing about this is that whenever you have like these sell-offs like this, like really quick sell-offs, and it doesn't go further, it just like defaults to go back up. Anyways, that's how the equities markets usually goes. Crypto did not recover. I found that pretty interesting. Ethereum is back down where it was after the dump. So is Bitcoin recovered a little bit, but it looks like people are buying it back up in the market. So that was actually pretty interesting there. Did I buy BMNR today? No, I sold BMNR today. I did not buy today. I think I sold like around the 51s or something. So I need to see some positive trends back in crypto in order to get back in. We got some moving average stuff. I'll go over some charts and stuff later on, but I wanted to kind of pick up what we were just discussing. There was actually a clip that I wanted to show you guys. Let me stop sharing. I want to share the entire screen real quick. All right, so um, we got basically. Oh, hey, look, it's me. We got this. Yeah, there's really no audio in this one. It's just like very loud, actually. Yeah, you're not going to be able to hear anything, so it's better you don't hear that. So pretty much, what had happened was that they finished the meeting, and it looked like futures were panicking because it was like, wait, there was no deal or anything going on. So they were, yeah, they had the deal on soybeans that that June was saying. We'll actually go over exactly what some details were because I think Ahmed actually posted it. But the big thing was that they came to some agreement. So it was a 1 year extension. There was a 1 year agreement that'll likely be extended, and that Trump was going to visit China in April, and Xi is going to visit the U.S. So definitely good news to hear. Maybe not like the 100% deals that everyone was waiting for. But China will begin buying soybeans and resume rare earth exports. U.S. and China will have continue to further discuss NVIDIA chip restrictions and overall China tariffs 47% from the 57%, and fentanyl tariff slash of 10% now. So that's where the 10% comes from. So this is actually kind of undoing exactly what was pretty much escalated. So for one thing, let's break this down a little bit. Okay, so soybeans. We are one of the largest exporters of soybeans in the entire world. We need China to buy our soybeans. They don't generally produce a lot of soybeans there. Obviously, they have a lot of the rare earths, but that's why we were like, seeing all the money rushing into MP or UUU and all those other companies. But now that we have resumption of rare earth exports, I would imagine that a lot of those rare earth companies that were ripping our faces off is likely going to sell off at some point. So, yeah, that's going to be very interesting to see how those moves are. I would pull it my overnight. Actually, maybe I could pull it my overnight right now. It's really unfortunate that TradingView does not have overnight trading here. So, I'm actually pulling my overnight, and I'm going to hide my dollar amount because I do not want anyone to see my dollar amount. Thank you very much. And how do you hide this thing on here? I can't. Yeah, I'd rather not show it. I don't want. I don't want to accidentally show my account. I don't want to go through some sort of crazy mishap with all of you guys watching this, all 57 of you. So, anyways, link to Air Force One audio with Trump after the meeting. That's right. Maybe Ahmed posted that one. No, it's the shaking hands. Okay, you didn't. I think Shy posted it actually. Here we go. Yeah, this is the one. Okay. Is this the one? Yeah, that two commas. That two commas. Anyways, let me widen this one real quick. No, you know what? I don't think that's the one that she was talking about. You know what? Is this it? Yeah, I can't. I can't click on that link in this thing. Hold on, let me try to go to you. Anybody know someone's Twitter that has the video on there? The one that June's talking about? Mm, let's see here. No, that one's not the one. Ah, here we go. This is probably it. Yeah, I think Was that it? Someone said Zero Hedge retweeted it. I hate this Zero Hedge account. It's like these guys are like perma bears. Trump said G meeting was outstanding. Yeah, that'd be the reason why the market's probably coming back. Bravo to Google. Anybody what this guy is wasn't he like a Google bear for a while? Interesting. We could probably go over that one a little bit, the Gene Munster thing. Yeah, this isn't the one. This is the one where we're just shaking hands. Yeah, I think that's it. Yeah, so guys, I mean, these people won't meet with each other if there is no deal. Okay, you don't have two presidents from the largest countries in the whole world meeting with each other unless it's a deal. So when I saw the market dump, I thought, okay, maybe this is just a sell the news thing. You know, would it be the first time that's happened? We've seen sell the news events happen all the time. But I mean, I don't know. Did anybody buy the dip? Did anybody buy the dip overnight? I mean, I didn't get to buy any dips. I really bought the dip in Meta after hours earlier, and that was pretty interesting. We'll go over the Meta stuff. But like, what's the state of the markets? You know, I wanted to go over what the state of the markets are. So really, I mean, this is the way that I see it, and then I'll jump into more of the micro stuff later on. So like, we basically had this whole thing erupt where there was this tension between China and Trump, and it all started a couple Fridays ago. It was only 2 weeks ago, right? Like, it was only 2 weeks ago when everyone thought the world was going to blow up. And we've recovered tremendously since then. You know, it's always pretty ironic because you always have the event happen. Actually, I'll pull up the charts because it'll be easier for me to explain the timeline just by looking at some charts. So this is the S&P 500 futures. All right. And it was back here. We had that tremendous Friday liquidity event. And in this event, you had basically Trump just out of nowhere just start tweeting about, you know, the China tensions that they're taking advantage of and whatever. And since that Friday, we dumped more after hours. And then you had like Trump basically just walk back everything after that in some sort of press release. And like, when you have like these massive sells like this in the market and it comes back, like, look, we're higher than we were before that. And nothing's really changed, right? Maybe you had some Oracle deals being announced, OpenAI deals, whatever, you know, but like, this is what happens when the dip gets bought. It just goes, boom, goes back up. The other thing that I found pretty interesting, though, was that you had the market propel back up. You also had IWM, like, or you had the Russell basically like not coming back as much since the sell, right? You had the Russell basically lead the whole way from August all the way until end of September, right? If you look at SP 500, you had the end of August to September, and like it didn't go up as much as the Russell did. The Russell went up a lot. So you had this massive push on like small caps and mid caps. And then the markets they went up, but like not nearly as much as IWM or the Russell, right? So I think what we're seeing now is that you have the SP 500 come up a lot since that incident. So let me take my measurement, my marker over here. Since the bottom, the SP 500 is up 5-6%. But then you have the Russell where this is up. It is about 5%. Okay, maybe I got to bite my words a little bit there. But did you necessarily see it in a lot of those speculative stocks that were running? Like, I know like some of you guys might own this stuff, you know, and kudos if you do. But you know, you have like these stocks that like ran up hard during this time and like they haven't really recovered. You know, you have a lot of these zero revenue companies, and you know, again, I'm not picking on any stocks, but you had a lot of companies that just have not fully recovered their all-time highs, right? And some of these are actually good companies, like ASTS. It's good. It's a good company right now. It's just that they're not printing revenue right now. But the market kind of took a step back and was like, "Well, we're a little bit cautious right now. You know, I'd rather if I'm going to hold something through this fear or through this wall of worry for whatever that end of year target might be, then I'm going to buy my Amazons. I'm going to buy my Apples. I'm going to buy my Googles. I mean, they're definitely buying Googles now. I'm going to buy my not really Netflix, I guess. I'm going to buy my Microsofts. I'm going to buy my Teslas. I'm going to buy like the things that have been working, that led the market up the whole way to this point. And I believe that these mega caps, which are $1 trillion plus companies, this is what's going to give the market the push up that it actually needs, because the market can't go up as much in acceleration without the mega caps. And the mega caps being the largest weight in the entire market, that is what will push the markets back up. And then you have the data center themes, which have basically come back, right? Someone brought this up. What's your take on Nebius with the part? We'll get a little bit into the data center stuff, but it just reminded me about some of these data center stocks. I got my whole list right over here. Like, these have come back pretty tremendously, but we're not at the all-time high that we were at before, right? We weren't at 140, but like, dude, this thing got sold all the way up to 95. But they had like these breakneck rallies, but then they pulled back the most and they haven't fully recovered. Same thing with IREN, it hasn't fully recovered, and same thing with some other names, they haven't fully recovered. CoreWeave hasn't. I don't really know what to make of this chart. Obviously there's a lot of fundamentals behind that, but the money is rotating back into things of value, things that are making and printing very good cash flows right now, operating margins, expansions, and so on. And they're a little bit less speculative than they were. And I think that's what we're going to have in this final push up, or at least the push up toward the end of the year. Who knows what's going to happen next year, but I think that's what's going to be like the big push up, because you have this money rotating back into the mega caps, going back into the NVIDIAs, the AMDs, and the Broadcoms, and so on. What do I think about crypto? I don't know, man. You had this massive liquidation event over here, and we're literally trading back to where it was before, making lower lows, right? And lower highs. Ethereum, not as crazy as a picture, but I mean, this looks like a massive bull flag, but I need to see some recovery here in order to get bullish on it again. I need to see some moving averages recover. We're trading below the 20-day and the 50-day. I got a bit bullish as it bounced up over here. But like, dude, honestly, for me, Ethereum is a different story, but like the BMNR stuff, like that's just one big trade for me. And it's a trade and I have to have stops to my trade. So like, that's the case of that. But the other stuff, right? Like the hoods, the Nebuses, the Amazons, the Meta and stuff, like, man, these are not trades. These are the companies that are part of the entire theme, and these are the mega caps that are really out there, that are really making the big money in this world, and they're going to ultimately change this world in terms of AI. So, with that being said, like, someone commented on about the IRENs. Well, I mean, think about it this way. My IREN position is not nearly as big as my Amazon position. Okay. My IREN position is not nearly as big as my Meta position, and so on. So you have more volatility. You have a possibility of things not coming through. And on top of that, the beta is very high compared to Metas or Amazon and so on. Like, I'm not going to size it that big. But anyways, I mean, if you're buying like Bitcoin or if you're buying like Ethereum, completely different story, right? Like, those things are not based on the short term, they're based on sentiment, but I think one way or another, crypto is going to ultimately go up. It's just a matter of like, is it going to go up from here? We're going to go back a little bit, and so on. But like, when you think about like the market in general, like the mega caps will go up as long as the market goes up. That is what is going to help the market go up, because they are so heavily concentrated in this indices. So with that being said, let's move on from some charts here, and let's get into the meat of it, because this is a stream that's basically going to go over earnings. Like, this is like one of the busiest times of the year. 4 times a year, we have all these earnings come out. And even though I don't own Google, even though I don't own Microsoft, even though I don't own a lot of these companies that are reporting, the fundamentals or the commentary that comes out of these earning calls, especially being that they're like $2, $3, $5 trillion companies, like, that commentary matters, because these are the people that are basically running the world. And what they say matters, because that's usually where everything's going to head, right? like I think it's very difficult to say that this is like a 1999 or this is like a 2021 because, well, 1999, you had a lot of the companies around that time that were hitting all-time highs and pushing the NASDAQ up were basically low revenue generating companies or companies that didn't have revenue, companies that didn't even have an office or anything, basically getting pumped up. Today, you have, we've heard this ad nauseum. You have the mega caps printing cash flows and having like very profitable margins. 2021, that might have been the case, but also we had a lot of macro involved in that one as well. And I would consider what's happening now in terms of employment as a normalization versus like employment falling off a cliff, right? And yeah, I mean, she's totally right. Like it's 2025. Like you can't compare this to like this is then, this is then, but like, is there a bubble being formed? I think there is a bubble being formed, but I don't know if we're at the top, right? Like it's so hard to justify whether this is the top or not. Because if you think this is the top now, then you could have been saying this is the top for a while. Now, what's going to happen next couple of months? I mean, it's anyone's guess. Like I usually attribute like short term, like maybe 1 to 3 months out. Like I attribute that to more to technicals than like fundamentals, because fundamentals is what really plays out in the long run. Like if you have the entire, if you have EPS and you track EPS growth and you correlate that with the market, like the market moves up as along with the EPS growth. So if EPS growth was actually expected to be like 3-4% in Q2 earnings when reported July and August, it ended up being like 7 or like high single digits, right? And that is what brought the market up, okay? Because you had all this contraction in terms of estimates. You had all these downgrades in the market because of those estimates. And then it all came back so quickly that all these analysts couldn't catch up. And a lot of money follows a lot of what analysts say, and they're going to lag the whole way. So this could continue. And I know that 7,500 sounds egregious, and I'm not pumping like spy calls until we hit 7,500. Like I'm not doing anything crazy like that, but like just this breakneck melt up that we've had is just nonstop. Like I showed you the chart. Every single time you have like a 2, 3, 4% dip, like it just not even 4%, like it just gets bought up, right? It shakes people out, and then people get out, and what do? They rush back in. And that's the reason why for me is like I put on hedges because I'm not liquidating my portfolio, but at the same time, like I want to kind of dampen the effects by trying to buy puts or put spreads on things that are not necessarily working. And usually short the things that are lagging. You don't short the leaders. Like you don't go out there and short the Palantirs, and you don't go out there and short Microsoft or Apple or anything. You go out there and you short things that are not working. Like I'd imagine a lot of the rare earth companies are going to be down a lot tomorrow, and you want to short something, that's what you short, but like I don't know. It's sometimes I just you see like a lot of people trying to short Palantir, call the top in Palantir. It's like, and I've said this many times, if Palantir goes down to $40, like we're gonna have bigger problems than Palantir. Like it's just that is the forefront of AI when it comes to software theme in terms of the entire stock market and the way Wall Street looks at it. If that goes down, the market is likely going down, right? And I know there's going to be a lot of argument as far as what I just said, but I strongly believe that like if you have Nvidia go down, the market's going to be down. We just saw that last April. The market went on a 23% peak to trough, and Nvidia went from $145 all the way down to $80 overnight, and that's way more than 20%. And Palantir didn't even go that much. It went from like what was that, like $120 down to like $70, but like that's what it took to get those two names down. So if you're gonna short Palantir, short something that's not working. There were many other things that are running extremely hot before April. You could have shorted those and probably done a much better job, paid less IV and Delta up front and whatever it was. So, anyways, let's get into the first thing. I kind of wanted to dissect Meta because Meta is probably well, to me, it was the most important one for me because that's one of my larger mega cap positions. But that besides that, Mercado Libre and ServiceNow, which I want to get into a little bit as well, Meta was probably the most controversial when it comes to how they reported. So I'm gonna go ahead and pull up Brad's. Actually, we'll pull up this one for now, and then we'll bring up Brad's because Brad actually kind of breaks it down to marginal levels. Okay, so we had Meta come in. They grew 25% year over year for their advertising segment. And then the other segment, which is like $700 million, payments infrastructure grew negligible. Okay. Advertising is what this company is about. Okay. It's not about Reality Labs. It's not about payments infrastructure. It's about advertising. And advertising is really what makes up the revenue from family of apps. The largest segment, like 95% of its revenue, more than that, comes from advertising. If advertising is doing good, it is because if advertising is doing good, then Meta is going to do good. You saw the reports, you saw the numbers from the previous quarter of AppLovin, Reddit, and you even saw Google today. Advertising is killing it. I saw what I need to see in this report. They are killing it with advertising. The problem with this earnings was not because of the EPS miss. At first glance, that's probably what people thought it was. They had a tax impact, which basically hit its EPS at the end of the day. I'm not an accountant, but that's generally what it was, right? But I think what took this down, which I don't agree with, is the Q4 guide. Okay, the Q4 guide basically said it was at 57.5 billion. I think that was a low end of estimates. Maybe it was a little bit higher and so on. But it really did imply flat growth year over year, maybe somewhat of deceleration. So this quarter we had 25%. This quarter I think was about 26%. Next quarter is like 19 to 22%. So that is a deceleration in growth. The market sees that and just like, well, then why are we going to buy Meta now if they're going to slow down the growth? And that really is what the market's about. But I argue with that because most of that slowdown was from the fact that they are not as bullish in terms of the revenue growth in terms of Reality Lab for the next quarter. And the CFO, I forgot her name, she said that they don't have a family of hardware coming out to basically get more revenue off of that, which is the reason why they had to bring that revenue down a little bit. I believe there were some other explanations as far as seasonality goes, but even if seasonality is the case, they do measure this growth year over year on a quarterly basis, so that should take seasonality out of the picture. But you want to do the TTM revenue in order to get all of that. I think it was kind of a little bit overdone, right? So I personally think that if the market stays bullish, because if the market's down 10% in the next couple of quarters, or in next quarter or next few weeks, I don't think Meta's going to be up after that, right? But if the market stays bullish, then I'd imagine this is all going to get bought up. In fact, I would not be surprised if this gets bought by the end of the week. And did I buy the dip? Yes, I bought the freaking dip. I bought the dip on Meta, all right? Was it a massive dip I bought? No, it was not a massive dip that I bought. So I don't know if it went to $500, I might load up the truck a little bit. But I thought it was a pretty good quarter. I think we have about 3 billion people in the entire world using family of apps every single month. 3 billion users. So again, they say users because we don't know if these are actual people behind those numbers, but we'll see. I'd imagine a lot of that is bots. But yeah, I bought the dip on Meta. I wanted to pull up Mr. Stock Market Nerds down by margins. Right. Where's Chris? Well, I don't know. Maybe we'll get Chris on here soon. All right. So we'll go over Alphabet and the other stuff soon. Here we go. Meta platforms. All right. So Family of apps, we already went through that, their entire revenue. So daily active users, 3.54 billion. This is obviously growing, and I think it's probably going to continue growing, not because we're getting 7.6% people, more people in the world in 1 year, but because you're just going to have more people start using the apps. But on top of that, I think a lot of it is bots. Like I don't think that there are 3.5 billion people using these apps every single day. I think a lot of it is bots. All right. But I mean, hey, the market likes it, so the market likes it, all right? GAAP operating income contracted a little bit, so maybe this was a little bit the reason why it sold off, but again, like, or I didn't say it again, but operating income does not include capital expenditures, which they did increase it from. I don't think they gave the exact number they increased it on, but they said that it was going to increase notably larger for next year. But they did increase their operating expenses by 0.9%. All right, so on an annual basis, and the capex guide was increased by 2.9%. Anyways, negligible, but it needs to go up. Okay, like if the markets can stay bullish, those capex numbers need to go up. GAAP net income 5.2% because of the tax hit. Free cash flow. I would say that considering how much they're basically spending, free cash flow is where the capex takes its hit at, right? So you have free cash flow, you have the operating cash flow, which is the cash from the business. You have investing cash flow, which is where the capex is going to go toward, and then you have the financing cash flow. So if you notice here, Q3 was at 38.2%. Now it's 20%. Now let's not freak out why they're losing. It's like, no, they're just spending a lot of money, right? So this is expected. And I would even go as far as to say, like, I wouldn't be surprised if this margin goes down. Okay. So don't be surprised if free cash flow margins go down, guys, because CapEx is growing faster than revenue. And that is not a bearish case because that has always been the case. So if anyone tells you that's the reason why Meta's down, like they can go to hell, because there is not a single mega cap out there that is increasing CapEx very quickly. Whether or not it's faster than revenue, who knows? But I would say for a company that made $50 billion this quarter, growing at 26% is pretty freaking insane. Okay. This is a $2 trillion company growing at 26%. So I don't know. Hard to be a bear with Meta. Hard to be a bear with Meta. So there are probably more details in terms of the conference call, and I was listening to it. I mean, I'm not listening for any specific details. I'm going to read some analyst reports tomorrow if it's anything. The ones that I do want to listen to very closely are the smaller mid cap names that I own, because usually you don't have a lot of analyst coverage in those. So like I got to kind of do that work myself. But like when it comes to a company like Meta, did I spend 50 hours of due diligence researching this company before I bought it? Hell no. Why? Why do I need to spend that much time looking for information that I want? I could just read an analyst report and then confirm it or verify it, whatever. So Meta is good in my opinion. I don't think this is the beginning of a massive CapEx downtrend where Mark Zuckerberg basically runs the company to the ground. I mean, if it does, I'm sure I don't think it's going to be $80. But never say never. Never say never. So the next one we're going to go over is Microsoft. I'm not going to go over Google because I think a lot of people went over Google. And when I do, I'm not going to go over it that long. So let me just do my timestamp over here. All right, cool. So Microsoft. Why is Microsoft important? Microsoft is the second largest hyperscaler in the entire world. The largest hyperscaler in the world is Amazon. The third largest hyperscaler in the world is the Googler. All right, so let me pull up Microsoft. Did he post Microsoft? Come on, Bradley. Come on, Bradley. Yeah. Oh, by the way, if you guys don't follow Stock Market Nerd, gotta give this guy some kudos here. Go ahead and follow Stock Market Nerd. How dare you? You didn't post Microsoft. How dare you? All right. We'll look at it over here. Yeah, this is a good one. Hey, you know what? I think I know who posted Microsoft. This guy posted Microsoft. Did I post it in detail? I didn't post it in detail. I should have, but I did not. All right, so let me scroll down here and pull up Microsoft. All right, I'll just go over the ones that do matter to me. All right, here we go. So Microsoft came in growing at 18% year over year, $77 billion this quarter. I mean, that is definitely not nothing to sneeze at. Like, that's freaking insane. You have these companies making almost $100 billion in one quarter, and they're growing at 18%. Like, it's crazy just thinking about this. Like, we're not in the .com bubble. Like, it's just, guys, like, come on. All right, anyways. EPS came in at $4.13. I mean, still not nothing to sneeze at. At the same time, it's like, it's just EPS, whatever. Operating income grew 24% year over year. Operating margins at 49%. Operating margins for Microsoft is at 49%. For every dollar of revenue that they get, 49 cents is operating income. That's just insane to think about. All right, so the big thing, Azure grew at 40% year over year. So Azure includes a lot of stuff. All right. But what the street's looking at is the Azure growth, and that came in at 40%. However, Intelligent Cloud came in at 20%. That's the one that I look at more because Azure includes a lot more other products. It includes GitHub, System Center, which is basically the localized deployment for engineers and sysadmins on site, Microsoft SQL Server, Windows Server, whatever. Okay, so that's a big one, and it's actually pretty interesting because it kind of reminded me. I was watching the Clippers game last night, and rest in peace. But I didn't know that I didn't know that the old CEO of Microsoft is actually the owner of the Clippers. But it got me thinking, like, so he was there until 2014, and then Satya Nadella actually started in 2014. But Microsoft didn't actually take off until 2018. So if you guys look at a Microsoft chart, let me just pull up a Microsoft chart real quick. All right, let's go by the month. All right. Microsoft. Okay, 2010, after the dot-com bubble, was trading at $30. By 2018, it was trading at $84. Okay. Considering the market basically more than doubled since then, Microsoft was underperforming the stock market. Everyone hated Microsoft. Satya Nadella started in 2014. Now, what happened in 2018? I'll tell you what happened. Satya Nadella pressed subscription revenue, annual recurring revenue for Microsoft Office, for all the licenses that they offer versus like, hey, just buy a Microsoft license and you get it for 3 years. Like, he turned it into a subscription model where people have to pay every year. Turned everything into that case, and that quickly changed their business model, and it helped them focus on getting more subscriptions and solidifying more deals ahead of time. And of course, this was also the time when they really went hard with Azure. And there was that time, remember, I don't know if you guys remember, but there was, I forgot the name of the deal back in 2018 where Microsoft won the deal versus AWS, and like Amazon got pissed when that happened. But that was like, that deal was the big move where it's like, wait, Azure could really be something now. And then it just shot up, right? So that's what happened to Microsoft. And that brings Microsoft to where it is today, where you have their subscription-based suite of products, 17%, 33 billion. That was also around the time where they purchased LinkedIn. And that was also the time where like they really made this move of like acquiring companies. Like, this is where Satya Nadella like really shined. Guy is still CEO today, amazing CEO, and the shareholders are very happy. Microsoft actually lost a lot of long-term shareholders during that time period, but came back. Everyone's rushing back into Microsoft now. So Why did this quarter come down? Well, that's why we're on this channel, right? Why did the quarter come down? Let's actually hold on a second. I thought I saw it somewhere. Let me bring this up over here. One sec, guys. I think I'm gonna play it in CNBC real quick. Here we go. It was this one. Yeah, so I guess there was a bit more expectation when it came to intelligent cloud. I mean, 28% is no joke at a $30 billion business revenue for the quarter. But maybe the street expected something more considering all these deals are signing up. I personally think that you're not going to see it this quarter. I think you're going to see it in maybe Q4, but I think you're really going to see. Oh, there's no audio. Can you guys hear me? Hello, testing, testing. Should be able to hear me now, right? No audio. Can you guys hear me? Maybe there's no audio on the video. You couldn't hear the video. My bad. All right, let me play it again. Let me play it again. My bad. My bad. Let me just bring it up here. Oh, I think I know the reason why. I'll do it again. My bad. It is probably because I'm not sharing. There we go.
Here, despite some beats on the top and bottom line and on Azure cloud growth, EPS was a beat at $4.13. Street wanted.
Can you guys hear that? Did you hear that?
To see $3.67. Revenue here, a beat as well, $77.67 billion. Street was looking for $75.33 billion. And Azure cloud growth, again, another beat here, 40% growth year over year compared to expectations of 38.2%. We're seeing shares drop here about 4.5%. I'm going to keep digging through and find out what's going on, and I'll be right back with some more color for you guys. Yeah, that's right, Morgan. One possible explanation, I'm digging through the numbers here to explain why we're seeing the shares go down. Intelligent Cloud was a slight miss. We're looking at $30.9 billion compared to $30.25 billion. It's a very tiny miss. But that said, it's the only miss I'm seeing in the metrics that we follow closely here. We're going to get some more data here on the earnings call. That's when we're going to get those CapEx numbers, guidance, and so many other things that could move the stock the other way. But right now, a miss on Intelligent Cloud is the only thing I'm seeing that could be a drag on the stock here after hours, guys.
Well, near.
Okay, so that was probably the issue with Microsoft. If that is the issue, I was saying earlier that's, look, this is going to show up next year. Maybe in Q4, it's going to show up maybe next year. But I think people were expecting it to show up this quarter. I mean, the dude was right. All-time highs, right? So they better show up. So pulling back, like, well, I think it ended the day after hours, like around 1-2% down. I mean, that's nothing. I mean, they were just up like 4% the other day from the OpenAI contract, and also that whole thing that comes with the OpenAI. But hey, if OpenAI IPOs for $1 trillion in 2027, that means Microsoft's 28% stake in the company is going to be worth a lot more. So I don't know. Does it matter? Probably not. If the market's green tomorrow, I would imagine Microsoft's probably going to green too. So we'll see. It's going to be interesting to see how Meta comes in tomorrow. I did not listen to the earnings call, so I'll look at some notes later on, maybe tomorrow. But let's move on to Google. We were listening to this on Amit's stream, so I'm not going to go over it. But let's go over the numbers here on. Let's see, where is it? Here we go. Yeah, let's go over the numbers on Stock Market Nerd. Oops. All right, so I believe they mentioned the guide. I might have missed that on the earnings call. They did raise guide on CapEx, but you had you had a company that grew 15.8% in terms of revenue year over year, and their first $100 billion quarter, a quarter in one quarter, $100 billion, and that's also operating income at 30.6%. So again, every dollar is 30 cents in operating income, $30 billion in operating income. Like, that's just freaking insane. So here's the thing about cloud. Okay. So cloud came in at $15.2 billion, just still pretty insane. It looks like last quarter they did grow sequentially pretty meaningfully. But 34% in a $15 billion quarter. So what is that, a run rate of like $60 billion? Like that's no joke, right? That's a large move for a company of this size, right? And this is the third largest hyperscale in the world, growing at 34% in terms of their cloud revenue. So, I mean, that's really good. But the thing is that, people are looking at it like, hey, 23.7% margins. Like, why is that so low for operating income for cloud? Well, because as they scale out, as they get bigger, this operating income will continue to go up, right? So this is the reason why a lot of people were not necessarily bullish Google's GCP or Google Cloud Platform, because its operating income 2 years ago was 3.2%. But now the operating income for cloud is at 23.7%. And this is going to get to like 32% probably in like a year or two. So keep an eye on that one. Is Google going to go to 400? Well, market says bullish it is. So, we'll see. It's at almost $300 overnight. We'll see what happens tomorrow. I wouldn't be surprised if this is $300 tomorrow. GAAP net income is 34.2%, like $100 billion quarter. Why did I sell Google? I don't know. Anyways, that really is it for most of Google. They made a lot of announcements during the earnings. Honestly, another thing, like I was looking at more of the other earnings while that was going on. Did they announce anything that was surprising? I mean, the stock was still up like 5% after hours, so I'd imagine they did not announce anything surprising. So it's going to make its choppy moves, whatever it is. But I mean, that was a massive beat. They beat revenue pretty tremendously on the top, and they also beat the EPS on the bottom line pretty tremendously. So I mean, they're chugging along. The stock basically doubled in a matter of a few months. So congratulations to shareholders on that one. All right, so the next one we're going to go over is Mercado Libre. Let's go over that over here, and I'm going to bring up the earnings presentation real quick in a second. This is actually my first time looking at Mercado Libre, so I will be just as surprised as you guys are if I find something in here, but that is why we are live, because we are doing it together. But just a high-level snapshot over here, we have Mercado Libre coming in at they beat revenue by 2.8%. You know, cool. They missed EPS estimates by $1.37. Probably not so good for the street to see. I think it was down like 4 or 5% after hours, and then it's like basically flat after hours. I mean, uh, the stock is not at all time highs. It did sell off pretty considerably, but what was it? About a week ago, there was some news with President Malay. Basically, it was their form of midterm elections over there, and basically his party won a lot of the elections, which is great to see because they promote capitalism over here. He is a capitalistic president in nature. There's actually an interview with Lex Friedman and MLA, and I think you guys should definitely check that one out. It's like a 2-hour interview, and it's translated, so it's dubbed. But I think that was a really good interview to listen to. I mean, the guy is basically like he studies American capitalism, and he's basically doing the same thing over there. So Argentina is going to continue growing, and I think that was like kind of the inflection point in Mercado Libre and Nubank, where Nubank didn't necessarily sell off too much. Mercado Libre did. It went from like 2,600 all the way down to 2,000. And I bought the dip. It was a great dip to buy, and now it's at 2,300. So maybe a little bit of a pullback after earnings, no big deal. But the gross profit margins of an e-commerce company at 43% are pretty substantial. When you think about e-commerce, it's not necessarily a high margin business. There's a lot of operations that happens there, and it's mostly in volume. That's how they make money. But if the gross profit margin at 43%, like that's still pretty good. Yeah, it's not 53% that it was a couple of years ago, but 43% is still pretty damn good. Probably what kind of scared people a little bit here is the operating income or EBIT margins came in at 9.8%. Last quarter, it was at 12%. So you had the stock basically go up after the earnings last quarter, and you see this contraction. The market probably gets scared, whatever, right? So what does that mean? Probably nothing in terms of a long-term thesis when it comes to Mercado Libre. So maybe it sells off a little bit, but I imagine it's probably going to be green tomorrow. And it looked like even after, as it recovered a good amount. GMV, gross merchandise value. So this is basically how much in transactions that happen on Mercado Libre's platform, right? $16.5 billion. That doesn't mean that they're making that much money because the amount of revenue that they make is after taking off all the overhead and that stuff. But they 50% of that about is going to the revenue, which is pretty good considering that like if you look at GMV is growing at 28%, but their revenue grew at 40%. So that means that they're making more money per transaction than they did a year ago, which is just very bullish to see for this company. Like that is the bull case right here. You see GMV growing slowly or slower than revenue, but you see revenue just multiplying over here every single year. So that is the bull case for Mercado Libre, is that they are becoming more efficient. GMV is more attributed to their e-commerce business, which is Mercado Libre, and Mercado Pago is their financial business, and they measure the GMV for that or transactional payment volume, which is the amount of transactions and dollar amount that goes through their payment business. Mercado Pago, $71 billion. You know, they're not getting that whole amount. Again, there's a lot of overhead. Obviously, when someone uses a credit card, they're not paying everything Mercado Libre. Mercado Libre is taking a cut, right? So that cut is giving them, that is attributing to the top line, right? So there you go, guys. And that's, I mean, there really isn't much to say on it. Why did they go down? I'd imagine, you see, the thing is that these companies report in US dollars, right? The reason why they report in US dollars is because they're traded in the US market. So they have to do that. And if you look at the constant currency, it usually is a much better figure than the FX neutral currency. But I guess the way these algos work is that they look at what is reported on the Bloombergs, right? And then they'll move based on that. But I think once it gets digested, you can kind of see in their dollars that things are actually really good. And that is ultimately where the growth is going to come from, by measuring their currency, not converting to US currency, because obviously US dollars is very volatile, or at least it's been pretty volatile in the last couple of years. What you want to look at, and this goes for Grab, C Limited, Nubank, and all that, you want to look at that currency. You at least want to look at not necessarily the US currency, but like what it is denoted in their local currency, or in that case, what they report on their top line. I think, yeah, it says over here, accounting and changes investments, adding pressure. All right, let's pull up the earnings presentation. All right, so earnings presentation. Okay, so in this case, constant currency was higher because the US dollar lost value during it. But if you want to track it without considering the FX impacts, you always want to look at FXN. But again, like if an algo picks this up instead of this one, like it's just going to sell, right? Like, so that's why it's like, you got to give it maybe a few days for like the actual reaction to price into it. But either way, like this is still pretty good considering a company that's making $16 billion. And it's not even that expensive a company. I mean, it is certainly a very large company, right? It's $116 billion market cap. But like, I feel like with Mercado Libre, it's like they're not just getting started because they're one of the largest companies in Latin America, but like they're kind of just getting started because these emerging markets are growing very quickly. When you think about GDP out there, and we haven't even hit like the full smartphone penetration. There's a lot of people who are not banked out there in Latin America. There's a lot of money out there that is just staying in people's bank accounts. You know, like when you promote capitalism in a country, that's when money just starts flowing everywhere, and that's where these companies really thrive in that type of environment. Let's look at the KPIs. So unique active buyers growth. So Amazon does this as well. You have the amount of buyers that are using Mercado Libre on their e-commerce platform. This is basically showing that the unique users is actually growing. So they're attracting more people to the platform, and that's growing pretty considerably. That actually re-accelerated to 26% versus 25%, so that's still good. We already saw this gross merchandise volume, items sold, more items getting sold, and so on. Of course, it's getting bigger. Same in next day shipments. This means that people are doing more. This is actually a much higher margin for them because it's kind of like what Amazon does, right? So you can either get your product shipped through UPS or whatever third party it is, or you can get it shipped by Amazon. In this case, you can get shipped by Mercado Libre, and it's cheaper for them to do that, and they could bring it to you faster. So people are opting more to do that, whether they're subscribing to the Mercado Libre's version of Amazon Prime. People are doing that for Mercado Libre, which of course is adding subscription revenue for them. Items sold per unique buyer. So again, like this means that the unique buyer is buying more, right? And they bought more than they did last quarter, which is also really good to see. Mercado Pago, like I mentioned, the financial arm for Mercado Libre. This one is still growing pretty considerably. For the monthly active users, 29% it still grew 29% instead of 30%, and so on. Credit portfolio. So Mercado Pago offers credit cards as one of their products. And what they're showing here is that you're seeing not only did all of this grow 83% year over year, but you're having a constant growth of all the segments within the credit portfolio, within the product portfolios, right? So you have consumers still growing at 37%. Law of large numbers, it does decelerate a little bit over time, but still the whole thing's growing to 83%. So you can't really like look at that figure directly. If you saw like a big drop off here, that's what I would be like, wait, hold on a second. Why did this drop off pretty quickly? So that what it would be, but like this is still growing at 83%. So it's that I think this is still great. Assets under management, 89%. Good to see. Net interest margin after losses. So this is probably, if I were to take a first glance at this, this is probably why it went down. So this is kind of what happened with Nubank when they went down to like $10, right? When it went from like 16 to $10 in just a matter of a couple months, because you had net interest margin basically contracting. So a lot of these financial companies, they make money off of the net interest, right? So people put money or leave money with them, or they save their money within an account with the Mercado Pago. And Mercado Libre takes that money and they turn around, they loan it out, whether it's credit cards or loans and so on. So they make money off of that net interest, off of that net interest. That's how they make their income. Net interest income is how much money they make. Net interest margin is basically taking how much money they make versus I forget the exact notation from it, but you want to see this figure higher, right? So this means that they're earning 2% less on net interest in terms of this entire business and how much the business made, right? So this is basically saying that maybe it was a digestive period, but it said some compressions quarter to quarter, mainly due to Argentina, where funding costs rose substantially, but asset quality remains broadly stable. Probably just a seasonal thing, if anything. They were pretty high here about a year ago, 24%, and then it went up 27%, and then it reaccelerated last quarter, and they contracted 2%. So I don't know. Who knows? It's kind of hard to tell exactly what's going to happen here in terms of the near-term future of Mercado Libre, but this would not be a red flag for me where I would sell the position. All right, so past due, this is basically showing that there's no credit issues going on. TBV, okay, financial metrics. Commerce net revenues, good to see. There is income. Okay, yeah, this is a chart that I want to see. All right, so yeah, this is probably why they went down a little bit. So the EBIT margins a year ago was 10.5%. Now it's 9.8%. I mean, not a big deal, but the market usually panics from stuff like this, right? So it wasn't like terrible, but like, yeah, this is the reason I went down. Their profit margins and their EBIT margins went down. It contracted. Okay. Adjusted free cash flow. Let's see here. So yeah, probably because they had more capex there. Cash, not really important. I don't know. It doesn't really seem like this is anything to panic about. Nothing's really standing out to me. I mean, how did the stock do after hours? I think it went down after hours. I don't know. Maybe the market just panicked because of that situation. I'm gonna have to dig into this one a little bit more, but I would say that if it was really going to come down to something, it was probably those margins contracting when it comes to the net interest margins, and when it also came to the net margins for the entire business as a whole, the group net interest. The group net income margins. So that would probably be it. What did Bradley have here? Yeah, that would probably be it. Okay, so. Let's do the next one, ServiceNow. This one's actually probably the more exciting one for me because this was it pulled back pretty considerably from like its all-time highs. All right, so we're gonna about 34 here. So let me just pull this one up. Here we go. All right, so ServiceNow, they grew 22% year over year. Always good to see. I mean, this is a big company, right? This is much bigger than Mercado Libre, but it is a U.S. company. But I believe they're in the 200 billion range. $189 billion company, right? So they were all the way up here at their all-time highs around $1,200. So they've gone down pretty far from there. So I think the reason why that this company has pulled up considerably was not because of fears with ServiceNow, more of a macro thing, right? You have all this fear that AI is going to eat up software, which I don't think is going to be the case for all of software. I think ServiceNow is going to be one of the beneficiaries of AI. But it's not really the favorable place. The market really wants to be in the mega caps. They want to be in the picks and shovels right now, right? So you got to wait. You got to wait for this one to pan out. I'm still bullish on ServiceNow. It's pretty good performer, but there was really nothing in here that like would be a red flag. In fact, the market did like the earnings. It was up 8% at one point, and then ended up being up like 4% after hours. But they grew at 22% year over year. This is one of the few profitable companies when it comes to software. I mean, at a $200 billion valuation, it better be a profitable company. But it's very likely that the market, they did raise their guidance when it comes to the revenue for the next couple of quarters. Operating margin came in at 33%. They're guiding for about 30% and 31%. So, I mean, maybe a little bit of a contraction for next quarter. But they're going to beat this revenue. So they're probably going to come in at revenue for subscription. I believe this is subscription revenue. Came in at 21% growth year over year. So they're probably going to come in at about there next quarter. And they're kind of guiding around there for next quarter. But they must have increased their guidance from the previous quarter. And that's probably the reason why the stock was up. I mean, 4% up for ServiceNow. It could end up flat tomorrow, depending on the market. But they were also probably up because they did a 5-to-1 split. I think you guys have seen it. Whenever the company does a split like that, usually people like Wall Street buys up the stock. And then once that split actually happens, that's when it kind of gives back those gains. So maybe it might be Grimnar, maybe not. But let's look over the earnings presentation. No, you know what? I want to look at they usually have an earnings presentation here. Is this one of the first years they don't have an earnings presentation? That'd be crazy. Yeah, no. Hold on, guys. They usually have earnings presentations for these companies. They did last quarter. I know they did. Here it is. Here we go. Let's get the nice looking earnings presentation. All right. So we have ServiceNow, which is probably one of the most commonly used CMDBs, or let's just say when you want to report a ticket in your company, you're probably using ServiceNow most of the time. All right, so subscription revenue came in at $3.3 billion, which was a 21.5% increase. Currency impact 100 basis points. So they should have actually came in at about 22.5%. Actually, no. This was the benefit. It was impacted on a non-GAAP constant currency. So when considering the tailwind, or when removing the tailwind, it actually grew a little bit slower. This company serves international customers, so not such a big deal with that one. Probably the reason why it went up was because RPO grew at 24%. So remaining performance obligations is basically money that they did not bill the clients yet. So this is money that they expect to bill the clients in the next 12 months. And that grew by 24% last quarter. Cumulative RPO, which is all of the money that they're going to bill the clients in the future versus just the year ahead, grew at 21%. So they're booking near-term deals with a lot of clients. Non-GAAP operating margin, so this is excluding many expenses, but software companies usually do this, especially for free cash flow, because they don't want to consider SBC in calculating the free cash flow, or the consistent and measurable free cash flow versus what you'd normally see from like a mega cap where they're basically buying back shares. Software companies have very high stock-based compensation. And that's why they usually deduct that to give you a non-GAAP metric. So then that way you can constantly, you can track it. You can track their performance and how they're doing without looking at SBC, because SBC could be super volatile, whether they go on a hiring spree, whether they fire a lot of people, whether they have their bonuses and stuff, and they issue stock to people like that. That can really go up and down. Non-GAAP is what you want to look at when you want to measure a software company's performance on a long-term basis, right? So still 33% non-GAAP margins for operating income, pretty good. Non-GAAP free cash flow margin, 17.5%. So we did have an increase by 2.5% for operating margins. We did have a slight increase in free cash flow. Let's take a closer look here at the guidance. Okay, so we already went through this guidance part then. Subscription revenue versus last year. Yeah, so that the subscription revenue did re-accelerate, and that's for the guidance. Wait, no. Yeah, previously issued guidance. So they did raise their guidance. So that's probably the reason why the stock is going up slightly. This is, oh, there you go. There you go. The whole year. No. Okay. Yeah, this is the actual fiscal year. What quarter is this? It's Q3. Okay. Why does it say fiscal year 2024? Interesting. Okay. Well, it's showing you what it was each quarter and actual growth. Okay. This is the previous quarter. And then showing the actual growth. Okay, so previous year growth. So law of larger numbers, the bigger that they are, the slower that they're going to grow. They're not going to grow nearly as fast the bigger they get. But still, like above 20% for a company making $4 billion last quarter is pretty good, especially when it's only a $200 billion company. All right. This is generally their backlog. Their backlog grew about 24%, 23%, still good, $24 billion in their backlog. So the backlog is, again, this is the RPO. This is how much they're going to bill the client in the future. CRPO is all the current RPO. Non-current RPO is basically not what's going to happen in the next 12 months, but what's going to happen in the future. Generally speaking, when you want to look at their entire backlog, you want to look at this figure, right? So this is what it includes. The whole thing is all of the RPO, right? The total RPO. That's the whole thing. CRPO, current RPO. So just to fix that notation from what I said earlier, just flip it around. Total RPO grew at 24%, which is still really good. All right. So current RPO, yeah, that makes sense. Current RPO. So anything next 12 months grew 21%, which means that people are booking more. People are booking more contracts for the long term. Pretty interesting. People want to stay with ServiceNow, it seems. Annual growth of initial annual contractual revenue. So ACV means annual contractual revenue. So it's basically you had like if someone signs like a 5-year contract for $5 billion, the ACV for that client is 1 year, right? So it's 5 years, $5 billion. Each year is $1 billion. And this is basically showing that, look, as years goes by, they're signing up more people, right? So it's like literally like growing every single year. The amount of people that they're bringing every single year is increasing, and the amount of money that each people that they sign up that's new is also increasing on an average basis as well. So, I mean, these are good figures to see, and this isn't something that I'm trying to like play quarter by quarter. This is something that I just want to see continue going in the right direction. So, like when I see a quarter like this, I think it's good, right? The stock didn't sell off, so I'm not going to add more, but I mean, it's ServiceNow. They're going to be around for a while. Almost every single enterprise company uses it. Renewal rate. So if you take all of the amount of people that they had a year ago, the amount of people they had a year ago, and then today, 97% of people from a year ago are still here today. So this doesn't include new people. This includes people who've been here a year ago, what they were today. This isn't the same thing as net dollar retention. All right. Net dollar retention is a bit different from this. That's the dollar amount from 12 months ago compared to today. That's usually a much more positive figure. Let's see if they actually have that here. NRR. I don't think they have it here. I'm actually surprised why they don't have it here. But net new. Okay, they don't have it here, but this goes by the number of clients. Oops, sorry, apologize. I mean, should the stock be up like 20% after hours? Probably not. Like this isn't like anything too surprising. Like I think they're just executing as usual. Is the market not giving it a premium valuation or a much more premium valuation because it's not exactly a cheap company? Are they not giving it because it's fearful that AI is going to destroy all software companies? Probably the reason why that's happening. With that being said, Snowflake's at $270. I don't know. You know, maybe it's like a pick and choose, but I don't think this company's going anywhere. Now, can AI affect this company if they don't innovate? Yeah, of course it can. But I think ServiceNow is like it's a product that no one ever switches from. I don't. If you like again, if you want to request a license for a software at your company, or if you want to buy a laptop and you send a request for it, or if you have an issue with an application on your computer, or if you need someone to fix your phone, you're usually using ServiceNow as your backend in order to put in that ticket, right? So almost every single enterprise out there uses this one. And if they don't, then they probably built something in-house. And if they don't, other than that, they're probably just trying to save money by just getting a much cheaper product. But this is pretty much a go-to product when it comes to IT and enterprises around the entire world. All right, so that does it with ServiceNow. I think that about covers all the topics that I wanted to cover today. Let me take a look at my notes over here. Yeah. Amazon. All right, so what are we going to get with Amazon tomorrow? First, let me pull up their last quarter. All right, so this is how Amazon did last quarter. Am I paying attention to every single figure on here? Probably not. I went over the bull case with Amazon a while ago. In fact, I did do a video on this last Friday with the boys. And let me just take a note of the timestamp here real quick. All right, so I mean, this is also a ginormous company. All right, $167 billion last quarter. Now, they're not seeing all this money. Okay, so this is like very similar to what you see like Mercado Libre with GMV and all that stuff. But Amazon, they do their accounting a bit differently. They're not going to have ridiculous gross margins when it comes to their business with $167 billion. Yes, they have a lot on the top line compared to Google, but Google isn't selling products in volume to people around the whole world. Their business model is much more margin than Amazon on its own, right? So, I mean, their gross profit margin is 50%, but their operating profit is 11%, right? So you will see that fluff there, but like there is a lot of overhead with delivering on an e-commerce business, okay? The higher margin businesses though is advertising and it's also AWS. And these are one of their fastest growing businesses. All right. So you have advertising growing at 23%, and that's about $16 billion last quarter. And you have AWS growing at 70%, but that's a $30 billion business for just that quarter alone, right? So online stores is $61 billion. But like I said, this is not like real revenue for them. The margins for this business are much lower. We're going to go over the earnings presentation for Amazon from last quarter. But I'm going to kind of walk you guys through exactly like what to kind of expect for this quarter coming around. Because there's a couple of things here. What I'm looking at here is advertising. I don't know. Hopefully they do it again, where they're going to show how much advertising they earn and how much that grew. They don't report operating income or margins for advertising. They did a year ago, I think, but they do it for AWS, and those are going to be the two most important ones. Am I really looking for anything from online stores and e-commerce? Probably not. I'm not. I don't own Amazon for that. I own it for the fact that it's the largest hyperscale in the world, and I bought more because the valuation got I don't want to say pretty egregious, but like considering the valuation of the stock market itself, trading at like 23 PE, Amazon is somewhere around there, and Amazon's growing a lot faster than the S&P 500, right? So I think Amazon should be at 250, $300 within a year. I think it should be at 250 by the end of the year. So we'll see, but we had to see AWS grow. Okay, we'll look at the margins in a second, but AWS has to reaccelerate. It cannot come in at 17%. If this comes in at 17% or slower, the stock's going to go down. And why? Because it'll mean that they are not growing as quickly as the other hyperscalers. And even though the other hyperscalers are half of its size, they should be growing at high teens, double digits. They should be growing 18, 19, maybe 20%. Do I think it's going to grow at 20%? I don't know. Maybe not this year, or maybe not this quarter at least. But if they do, this thing's going to $300 easily. I think they're coming to 18, 19%. All right. But I think there's going to be a lot of positive remarks in terms of how much demand there is, which will provide that leg room for it to accelerate to 22%. Because I don't want them to come in at like 20% plus this quarter and then decelerate from there, because I feel like that's going to be a little too fast. But I do want them to come above 17%. Advertising, I think this is going to grow pretty tremendously. 23%, I don't know, but I think it's going to be in the 20%. You saw Google's revenue for advertising grow a lot, Google search. You saw Meta, you saw AppLovin, Reddit. This better grow. Okay, so if advertising doesn't reaccelerate and AWS doesn't reaccelerate, we're going to have problems, okay? Long-term problems, probably not. Short-term problems, market might not react too positively from that one. All right, so let's look at the Amazon Investors Relations page. So this is from last quarter. They report earnings tomorrow. Going to be a big one. I'm going to be an Amit's live stream for that one. All right, so I don't care about e-commerce. I don't care about group net income. I want to see Azure. See, they don't report these figures for Azure. I'm for advertising, unfortunately. But let's take a look here. All right, so again, 17% year over year. The TTM net sales is at $116 billion. Like that's pretty amazing for a business that's basically made almost half of that in operating income. Let's actually calculate this real quick. So you have 42.8 divided by 116.4. Yeah, they're at about a 36.7% operating margin. Like that's freaking insane for a company that's making this much in the last 12 months. Like this is why I own Amazon, because of this. Like, are they going to expand it meaningfully? Probably not. They've probably reached like peak operating income. But as long as we continue growing the top line, that means they're earning more operating income. That's the important part. And like, as a group, as a business, I think the whole business on itself is going to expand margins. But you need to have the other segments grow and also become more profitable. We're going to take a look at their international real quick, but their international is becoming more profitable. Free cash flows, this is going to go down. Like I mentioned, the higher their capital expenditures are, the more it's going to hit their free cash flow. Share count, I don't know. It's a growth business. I don't really care about that. All right, so where is their, let me go back to net sales. All right, so breaking down e-commerce, North America is 60% of the revenue expected. International, you know what? Actually, let me do this in Fiscal AI. Hey, by the way, if you're on Twitter still, go ahead and go to the YouTube page. All right. I release videos on there. Also, it's better to watch us on YouTube. You can go back in the video. It's just much better to watch us on YouTube versus Twitter. But you can go ahead and go to my YouTube page. The Solid Finance is my channel name, or youtube.com/The Solid Finance. Man, it is late over here. It's almost 12 a.m. I should be going to sleep because I got to wake up early tomorrow. All right. So appreciate you 46 people watching on YouTube. And whoever else is watching on Twitter, kudos to you guys too. All right, so fiscal.ai. Let's bring this up real quick. All right, Amazon. One second. Okay. Yeah, no, it's definitely late. All right, so let's look at the segmental revenue. By the way, if you guys are interested in fiscal AI, you can get a 15% off code if you use my promo code in the description. You don't have to, but I use it a lot. All right, so quarterly revenue. All right, AWS revenue. Oh, they reaccelerated a little bit last quarter. That's interesting. How come I didn't notice that? All right. International revenue. Let me just bring this up. All right. Let me hide international first. Okay, so this is North American revenue. All right. This reaccelerated last quarter 11.1%, which is really good, but I don't know. The stock did go up last time? I was kind of forgetting the other quarter. It did not go up after. And if you look at this contraction in terms of the amount of revenue they earn, I mean, this is obviously a seasonal chart, but it grew 7.6%, so it decelerated 9.5%. Last quarter, it went up to 11.11%. Is this going to go up? I don't know, man. Your guess is as good as mine when it comes to a lot of these tariffs. There's so much macro involved when it comes to sales, but in North America alone, I think this is still going to be strong. I don't think this is an important figure. Maybe it might be to the market. To me, it's not as important for this. Probably the more important one is international. So on the earnings call for the last quarter, Andy Jassy, the CEO, was talking about how bullish he is on emerging markets. And those emerging markets is coupled in the international revenue. International revenue grew at 16% last quarter and it reaccelerated from 4.9%. Is it going to grow in double digits again? I think it might. I think the presence on an international scale for Amazon is definitely growing. I think the GDP across the entire world is growing as well. It's a lot better than it was the previous quarter. I think this number is going to go up. It might even be like around 20%. I wouldn't be surprised if around 20%. I think the market would definitely like that if that did happen. So I would say as a whole, when it comes to this pie you see here, let's exclude AWS real quick. 22% for international. I think this is going to come in like where international is getting bigger and North American is kind of stabilizing, right? So I think that'll be really good because do they show the margins for? No, they only show margins for third-party sales. Third-party sales is obviously not as high a margin as first-party sales, where Amazon basically is the one selling the product. But I do think they're going to start charging a lot of these businesses more. Or in fact, they probably have already done that, which is helping them with their operating income. So I do think operating income is going to be flat to bigger as far as the business goes, but I do expect a little bit of a hit in operating income for AWS. The reason why would be, I don't know, your guess is going to be good. It's mine, but I don't think operating income for AWS is going to expand. If it does, like the stock's definitely going to go up. But I think the biggest factor is we already know CapEx is going to go up. We already saw Google and we already saw Meta increase their CapEx as well as Microsoft. Amazon is going to increase its CapEx, but Amazon is also has the largest CapEx out of all of them. So, I mean, we'll see what it is next quarter. We'll see what the guide is for next quarter. They usually say that in the earnings call. They're not really going to put it on here. So we'll see where that's at. But again, I want to see advertising continue to be at 20% range. And I want to see AWS close to 20%, like 18, okay, 19. I think we're going to be Gucci, all right? So that's where it's at for Amazon. It's going to be very interesting to watch these earnings tomorrow. So I am getting super tired right now. Let's take a look at here. Oh, wow. The sun is rising Eastern Europe. Well, why not order from Amazon? Let's help those earnings out. Going to be morning here next to Wall Street in a few hours. Hard to sleep thinking of all the money we're about to make. Well, I mean, it's also going to be hard sleeping thinking about how much money you might lose if the market's red tomorrow. But yeah, I mean, it'll be cool if the market's green tomorrow. We'll see. We'll see. I'm sorry to shout on your birthday, but I mean, that would be kind of annoying. But I don't know, man. Just like seeing the way the market's reacting overnight. I don't know. Your guys as good as mine tomorrow. But we'll see. I mean, we're up pretty. The gap ups on these charts are pretty freaking insane. Like it's just in a breakneck rally. Like this is insane. Like this is crazy. But it could keep going. But like this is crazy. I don't know. We'll see. We will see. What was I gonna do? Oh yeah, that's right. Samarth, appreciate you, my guy. Asked me about Rubrik. So okay, so here's the thing. I'm bullish Rubrik. Am I loading the truck on Rubrik? No, I'm not loading the truck on Rubrik. I'm adding slowly, but I'm not loading the boat on Rubrik. Why? It's the chart, right? Rubik is already a pretty big position for me. It's like high single digits. I can't remember what it is, and it's mostly in shares, so I'm not too worried about it at all. But like this chart is just disgusting. I mean, you had this massive rejection here on the 50-day moving average, and then it went below the 20-day moving average, and then it went below the 200-day today. Why did this thing sell off 5%? I believe it was because Commvault had really bad earnings. Yeah, Commvault had really bad earnings. So that's probably what it is. Now, what is the difference between Rubik and Commvault? I've went over this more than a few times. You can check out the videos in the channel. I'm super tired right now, so I'm probably, excuse me if I miss some details, but Commvault is a legacy backup system. Okay. That doesn't mean that they don't have new products out there. It just means that they've been around for a long time. And usually when these new players come in and disrupt the entire sector, that's when that has the most potential. We saw with CrowdStrike when they came into cybersecurity and they just dominated the sector from like Microsoft, Trend Micro, Symantec, and all those other companies. I think we're going to see it Rubrik. The reason why I think Rubik is very different from these other companies, because one, Rubik is cloud native. They have Rubik Security Cloud, which is literally built for every single hyperscaler, every single cloud service provider out there. They got one for Google, AWS, and Amazon. And Commvault does now, but like they're kind of late to the game and they still have a lot of their legacy clients to support. Rubik is like, you got to sign up for the subscription tier. So Rubik has that recurring revenue that is where most of its revenue comes from, and they're expecting that concentration of recurring revenue or subscription revenue to increase and become a much larger concentration in the future, to the point where it's like negligible whatever their other concentration is, which is mostly in services. I can't tell you exactly how Commvault operates today, but it used to be more in a license-based model. And then on top of that, the software had to be installed on site. There's just a lot of nuances with Commvault. That's not how it is today. But at the same time, you have these large companies, enterprises using Commvault that are going to eventually switch into Rubrik once they get more of their products into the cloud. And it's like, which software would you rather use for cybersecurity and data security? Not cybersecurity, but mostly data security and data retention. Are you going to use a product that's been made for the cloud and optimized for the cloud? Or you can use a product that kind of just switched into it a little bit late, still is like not the best and most recommended product out there, and probably more expensive. You're likely going to use Rubrik. Is this going to happen overnight? Probably not. Okay. Like, I mean, the chart kind of tells you where it's going to go in the near term. Like, I don't see this mofo bouncing up and just going $100 overnight. Okay. We at least need to wait for a catalyst. Their earnings is not until, this is actually an estimate, not until December. This is part of the software realm of earnings. These usually happen like way later, weeks after the mega cap. So we got more than a few weeks for this one. We got a lot of time for GitLab and all those smaller other companies. I'll get into GitLab in another video. They're probably going to be acquired. But really, like, I would rather wait to buy it around here than to keep on buying it if it just keeps going down. And I've learned this from a few people recently, is that, like, if I just keep buying this as it goes down, well, I know the company's going to come back, but it's like, what's if this keeps going down, but the market goes up, then that is opportunity cost as I keep buying to the company. So, I mean, I could buy little by little or DCA into it, but I think there's still opportunity in the market to be buying other things. And I think there's a lot of other things that the market does like, right? Like Nebius, the market loves Nebius, right? The market loves Iron. The market loves, it's starting like Amazon again. I think when you think about Meta, Meta is trading all the way. Wait, what's Meta at after hours? Okay, it's in the 600s after hours. It's still above the 200-day moving average. This is actually going to be pretty interesting tomorrow. I want to see how that actually reacts now that I think about it. You know, the market likes hood. The market likes a lot of stocks that are in an uptrend, a massive uptrend where the 20-day moving average is trading above the 50-day moving average, trading above the 200-day moving average. The market likes that stuff. It doesn't really like things that trades below the moving averages, where the 20-day crosses over to the 50-day and where the 20-day is going to cross over the 200-day. Like, is Bitcoin going to flip around and come back and make new all-time high? Maybe, right? But like, would you rather buy Bitcoin right now, or would you rather buy Amazon? Would you rather buy Ethereum right now, or would you rather buy BMNR? Right? Look at BMNR. This is where Carsdale Capital started shorting this thing. Freaking Carsdale Capital, like, had to shit in everyone's show. But look how high above the 200-day moving average BMNR is versus Ethereum. Way higher. Okay. Bitcoin, this isn't the best looking chart, but I'll tell you what people are not buying. They're not buying MicroStrategy. This is a terrible chart. In fact, look how far down MicroStrategy is from its all-time high. It's almost half of its all-time high, right? Now, I have a little bit of MSTY, even though this is like the worst looking chart ever. But I'm not like loading the truck on MSTY, right? I think this is all going to come back at some point, but like, we're talking very little capital in this one, where it's like, okay, not a big deal. So Rubrik for me, though, is a big position. It's a big position. And do I want to make it bigger? Honestly, I don't feel comfortable making positions over 5% unless it's like a mega cap, or unless it's like a company that's super undervalued. Is Rubrik super undervalued? I think it's cheaper than where it was up here, but cheaper can get cheaper, right? And we've seen it. I mean, I could have kept on buying the dip hand over fist with toast, but like, this was the warning sign right here, right? This has just been on a massive downtrend for a while. And yes, I believe this company. I'm very bullish toast, but it's like, dude, the market's at all-time highs and this thing's on a nasty downtrend. Like, am I going to keep throwing money at this thing, or do I want to put my money in things that are working, right? This is working. Amazon came back here for the 200-day moving average. I added an Amazon, and look how much it bounced up. I even added Leaps to Amazon, and look how much it bounced up, right? Mercado Libre came down way below the 200-day moving average, but where was that? Oh, did I delete the drawing? I might have deleted the drawing, but obviously this is looking good. It recovered the 200-day moving average. All right. Now, what's the difference between Rubrik and Mercado Libre? Well, I bought the dip in both of them, that's for sure. But this one rejected the 200-day moving average, right? So I need to wait till this comes back. I really do. I mean, I might add small amounts to it, but like, I need to wait till this sucker comes back here to start adding in size. And I'd rather wait to it to add into size versus keep adding in size now. And it's like, how low does this go? I don't know. I'm not the market. I'm just the Joe Schmo, right? I'll keep my position, right? But if the market goes bearish, I might hedge this. The problem is that the options are just totally illiquid, so it makes it a little bit difficult. So we'll see what happens. But you know what? I have no problem like thinking how this is going to be in the future, right? So we can all be right with our long-term thesis, but like that's like saying like, are you going to load the boat in Nebius here, or are you going to add it when it's over here? Or are you going to add it when it's here? And we don't know when this or this is or this is. Like, I didn't know this was this, but I was adding to it as it was going down here, right? As it's coming down, especially when it tests the 50-day moving average, I was adding to it, yeah? And then look at IREN. Was I adding here? I was not adding here. I don't think a lot of you guys were adding here. I was adding here. I'm not gonna lie, I got a little bit scared over here, and I like closed my eyes and I added. Right, but I mean, again, like this isn't. If this is an 8% position, iron is 8% position. Like I would not add it. I would not add to it. Not with this. Like this is crazy, right? This is the reason why this is a 2.5% position. So, anyways, I think I talked enough about rubric. I mean, where does the market stand? Did someone ask about Nebius? I thought somebody asked about Nebius. I mean, dude, like it's just okay. This is like a hit or miss on the market. Okay. If the market goes down, Nebius is going to go down. If the market goes down, IREN is going to go down. All right. Like this is just high growth stocks. High growth stocks. I cannot put 20% of my portfolio in this on the get go. Nebius is more than a 10% position for me, but I didn't make it a 10% position. And okay, it sucks. In hindsight, oh man, I should have made this a 20% position back here. But who would have known? Who would have guessed this was going to happen so quickly? So quickly. Like if this took years to happen, oh, I would have definitely made it a bigger position. But this was so fast. Like this didn't give you any opportunity to add to it since it was down here, right? This was a little bit of an opportunity, but this can become this later on. Like it's just I gotta manage my risk. I gotta manage my risk. I'm not 20 years old. I'm not gonna retire in 50 years. I got 2 kids and a family and a house. Like I can't be doing crazy stuff, right? I mean, I could with Amazon. That's a different story because like Amazon isn't gonna be down here unless like it's a freaking apocalypse, right? Like this was a near-term apocalypse right here. This was man, I bought the dip here, but this was scary. Like there is not a single person out there that was buying the dip last April with like zero fears. Okay. Everyone here was buying the dip, closing their eyes, hitting the buy button. I was, right? It turned out great, but like, who would have guessed this was going to happen just a few months later? I didn't know that was going to happen, but it's great that it did. But there were signs as it was happening. But like, I didn't buy down here being like, we're going to be double the amount in a few months. Like, no, I don't. If someone says that they knew exactly when the bottom was in April, like you got to choke that person. No one knows when the bottom was in April. We got confirmation it was the bottom. I still remember that. When we recovered the 200-day moving average. I was like, this is it. We got back to 200-day moving average on SPY. Textbook test over here. Boom, off to the races since then. Like that was like your textbook test right there. That was your textbook. I literally thought it was going to happen here. And it kind of did, and it faked it. And like, I don't know, maybe Bitcoin might do it. Maybe Bitcoin might do it right here. But it was not under the 200-day moving. This is when you do the textbook test. This is not when you do the test. This is a retest of breaking through the 200 moving average, not bouncing in like, boom, we go up. I thought that was it here, but we all got faked out. Faked out. Pretty sure Hood did that textbook bound. Oh, wow. Hood actually went down to the 200 moving average. This was an amazing buy down here. So, yeah, we'll see. Actually, this is going to be pretty interesting because Meta is coming near its 200-day moving average. I think this was like around 680 after hours. Oh yeah, did this thing test the 200-day moving average like right there? Holy cow. Wow. Wow. Okay, we'll see how that one turns out tomorrow. That's going to be very exciting to see. All right. That is it. Appreciate you guys. It is midnight over here. I'm about to get my sleep on. And dude, I feel like I'm going to wake up tomorrow morning and the market's going to be red as hell. And I'm going to be like, God damn it. This market's so crazy. Like, I don't even know like what I'm going to wake up to tomorrow, but I'll see in like 5 hours because I got to wake up in 5 hours. I don't know, man. Yeah, appreciate you, ETF, and also appreciate all of you 55 people watching on YouTube. Again, guys, if you are on Twitter, you should join my YouTube page. You should check out the video. You should like that video. You should subscribe to the channel, right? I think you should. That won't be a bad idea. I feel like there's like something I wanted to cover, but I just can't remember what it is. But I appreciate you all chilling with me. Super late out here. Let me check out the Discord real quick, see if anyone's like asking any questions out there. I should really go to sleep. I was actually gonna hit up Chris. I was thinking about hitting up Chris, but I know if this guy comes on, I'm gonna be on here until like 1 a.m. No, I'm not gonna do it. I'm not gonna. Sorry, Chris. If you're watching, Chris, I'm sorry. I can't call you because I'm going to end up being up until 1 a.m. But yeah, no, we're going to have another hidden edge soon. No way. I'm muted. I'm not muted. Am I muted? Yeah, appreciate you guys out here. Dude. Like, okay, if the market's down tomorrow, it's down tomorrow. But like, I think every single day, probably for the last, since the other Friday, it's always felt like, you know, we're so extended, the market's going to top. We're so extended, the market's going to top. And it's just, it literally is like the wall of worry right now. Like when SPY was at, it's at 687 right now. When SPY was at like 620, like it was like, we're good. But like, dude, we're getting to almost 7,000 on the S&P 500. Like, it's just, this can't last forever where we're only down max like 2.5% from all-time highs at all times since April. Like, this cannot happen forever, right? It's gonna pull back at some point. And like, I want to be ready. Like, I want to be ready with some cash. Like, if we get, I mean, I don't think we're gonna get a bear market or anything. But what I could see happening very quickly is like a 10% correction, like a matter of a month, like down and up, right? I think that could easily happen. And when it is, like, I don't want to be like swimming in call options on like high beta companies. Like, I want to be holding like things that I really do like. And to be honest, I've cut more than a few positions from my portfolio and really just worked on concentrating my holdings. Cause I think when, what was it, like 6 months ago, I had a lot of positions in my portfolio. I had like 30 or 40. And I've come to realize, especially as the market goes up, is that like, I'm like really like reflecting and knowing that the market is not going to keep going up in a straight line, right? It's going to pull back. Like, I think the market will end up be higher in the next few years, but like, it's not going to be a straight line up. And I like think to myself, like, what am I like okay holding? Like, I'm okay holding Rubric. Okay. Like, I'm okay holding that one. I'm okay holding the Amazon. I'm okay holding Meta. But then there's some things that like, I'm not okay holding, right? It's like BMNR. Like, I'm not okay holding that if we get a massive drawdown, especially with Ethereum coming down to the 200-day moving average, Bitcoin about to break 200-day moving average. Like, I'm not okay holding that, right? Like, I'll add it when it recovers it, but like, that's a swing trade. Like, I can't say that the long-term, no one knows the long-term for BMNR long-term thesis is going to be. Like, no one knows, because no one knows where the future price of Ethereum is going to be in like a year or two, right? And that matters with BMNR is because BMNR trades at a much higher beta than Ethereum. So if Ethereum goes down to $3,000, which it can, BM&R is going to be like way lower, way lower. And I'd be careful, guys. I would be careful not to be too big on stuff like this, only because it is, a lot of it is really based on sentiment. Like there are no fundamentals with a lot of these companies that are high risk out there. Or if there are fundamentals, they might have ran too much in the beginning. And I'm not saying BM&R is that, right? But like it tracks Ethereum. There is a perfect positive ratio or near perfect positive ratio of BM&R and Ethereum. Maybe it's a little bit less, but like it's like near perfect. Now, what is the beta of BM&R what is the ratio to Ethereum? Well, the correlation is positive, but like what's the ratio? Well, I think BM&R is kind of detaching itself from Ethereum the more Ethereum accumulates. And when I say that, I mean like if Ethereum goes down to 3,000, I don't think BM&R is going down to $20, but it's certainly going to go down. But like no one knows where the price of crypto is going to go in the near term. So, for me, it's a trade. Ethereum, I don't think is a trade. Ethereum would be something that I would hold long term. I have a little bit, but like not a whole lot. I mostly have, when it comes to crypto, and I don't even like consider part of my portfolio because I don't even want to look at it. But it really is, just buy and hold when it comes to some of the cryptocurrencies. And I don't even include my portfolio calculations because I don't even want to calculate. I don't even want to look at it. But when it comes to BM&R, it's like, I'm not going to hold on to BM&R like forever. In fact, almost everyone who I talk to is not planning to hold on to it forever. Everyone that I talk to is going to sell it like when Ethereum goes to like whatever they think the top of the cycle is. Like, is that like a long-term thing? Like I could foresee Amazon, right? Like if the world is doing great in a couple of years, Amazon's gonna be way higher. Like that, I could put my money behind. The same thing with cybersecurity stocks, but like with BM&R, like, dude, I don't even know. Especially all those other crazy stuff out there, like all those highly speculative stuff, like Beyond Meat. It's like people think that Beyond Meat's gonna like turn around company. I mean, who knows? Maybe it does, but like, dude, that's like a gamble right now. And you think about like Oklo and all that stuff. Like Oklo will probably be successful in the future, but it's like, dude, it is priced in all of that success so early. Like it does not make any sense. Like Oklo can go down to like $50 and the market could be at all-time highs. That can easily happen. Easily happen a lot of these companies, but like, will Amazon be at $120 the market's at all-time highs? Probably not. You saw that with Google and it just scooped it right back up. Right? Like those opportunities don't last forever, but like some of these companies, they could go down like 90% and that's it. Right? There's companies from 2021 that never recovered. And some of these Bitcoin mining companies, I've looked at more than a few of them, and really the ones that stand out are like Iron and Cypher. And the reason why is because those are already profitable Bitcoin mining companies and already doing really well. But Iron is expanding very quickly and they own all the infrastructure and the entire stack top to the bottom, which is something that I learned like probably in the last few weeks that I was like, wow, this is actually pretty cool, right? Cypher already has deals with Google, right? And Nebius already has deals with Microsoft. Like it's like it already builds momentum. Now, CleanSpark, I mean, I've been like in and out of that thing, but am I going to get behind that one? Well, I don't know. Maybe I have like a small tracker position, but like I'll size up like when Bitcoin comes back because it's way too correlated to Bitcoin to even do anything like that. Now, when you think about the Iron and Cypher, like they pretty much detached from the price of cryptocurrency. Like they're doing their own thing now, which is great because that's always good to see. Nebius was never involved in that because Nebius is mostly NeoCloud, same thing CoreWeave. But I'll tell you something, guys. When we go risk off, which will happen at some point, like these are probably the companies I'm going to hedge. Like I'm going to buy or I'm going to like sell call carded spreads and stuff. Like when the market's like really weak or something, like, just try to dampen the downfall, whatever. But like, when things go risk off, I get defensive pretty quickly. And when they come back, then I close some of those hedges and take the loss on it. But the rest of the portfolio is up way more. So it's like, whatever, right? Like I got to protect my capital just in case. But, things get a bit different when you basically, for me, when I invest in like companies with very high beta. But anyways, I digress, guys. Anyways, that is about it. Actually, let's just take a look at this before I go to sleep. I wanted to go over what the earnings that are going to report tomorrow are. I need to move my camera to like a position where it's like I'm kind of looking at you guys, because like right now I feel like I'm just like talking down right now when I'm like actually looking at myself on the screen. Here we go. So yeah, guys, we got a busy day tomorrow. Like, holy cow, this is like a 2-hour stream, and I like went over some of these earnings high level. Like, you know how much time this takes to go over all this stuff, guys? Like, I got to wake up so soon. All right, so tomorrow we have Amazon, we have Cloudflare, Reddit, Apple, Coinbase. These track Bitcoin. These don't matter. Maybe Coinbase. Coinbase might matter. MicroStrategy tracks Bitcoin. Atlassian is an interesting one. Why do I think Atlassian is going to rally after earnings? But I just think this is going to be a target for AI. I don't see the moat in this software anymore. Very sticky product. But if there's one thing that I think AI is going to hit, it's going to be this company. And I think the market's sniffing it out. Same thing with Workday, unfortunately. Florida core reports, that'll be an interesting one. But yeah, Lumen reports, someone said that in the chat. Yeah. I mean, it's definitely going to be a big day. Oh, shoot. MasterCard's tomorrow morning. That's going to be a cool one. Merck, isn't that trucking company? So we're going to hear about logistics from that one. So it'll be interesting. Oh, Steve's got his Altria reporting. Interesting. This guy, ING Direct is still around? Wow. Wow. What's that chart looking like? ING. Still remember those 5% accounts. Oh, geez. Oh, wow. They've rallied pretty strong from the bottom. Interesting. Oh, god damn. Wow. Crypto's making a comeback. Holy cow. Holy cow. Nice. Good work, guys. Good work. Someone's buying the dip. Hey, yeah, man. Appreciate you, ETF phone home. Thank you for the super chat. Can tell I'm working out. Dude, it is. I don't know why I do this myself. I don't know. Maybe it's the love of the game. Maybe it's the love of the game. Maybe it's the love of the game. But yeah. Our initial jobless claims actually coming out tomorrow? I wonder. GDP quarter-over-quarter preliminary, and then core PCE on Friday. Are these numbers oh, you know what? I think core PCE is actually coming out. Or maybe it's not. I have no idea, dude. I have no idea. And then what's going on next week? Oh, wow. That's going to be a fun one. Hims and Palantir on Monday. Astera Lab. I would love to get back in Astera Labs. I would love to get back in Apple Oven. We'll see. We'll see. Hood. My boyhood. Yeah. TTD. I actually wonder if TTD is going to dump again after earnings. I sold TTD at like the 70s when it came back. I haven't looked back since. I don't know, man. I don't know what's going to happen with TTD. They need to turn around things. They really do. But, I think the company's going to be fine. But, like, is it going to command an expensive valuation still? Probably not. Oh, yeah, that's right. Iron's next with Cypher. I don't think those earnings matter. These guys release, like, a new press release, like, every day. I don't think the earnings going to matter. Might be an option selling event. Who knows? Who knows? Maybe I might sell some far covered calls on that one. That would be interesting. I think that's going to be an option selling day. Like, these mofos release a new press release like every day, almost every day. These miners release a new press. What could they say during earnings that will surprise everyone? Like, they're going to release their plans, but like they talk about their plans all the time. Like, I don't know. Option selling event, maybe. Axons on Tuesday. I would love to get back. You know what? This is why I got to chill. There's so many good companies out there, but like you really have to. You guys are right, man. You can't have like 20, 30. You can't have like 40 positions in your portfolio and like be able to pay attention to all this stuff unless you just want to like chat GPT everything. Yep. Yeah, earnings is not like Christmas time because I look forward to Christmas I don't look forward to earnings season. Like I really don't, because like this is super busy. I looked at like 4 or 5 earnings today. I didn't really get to dig deep into them. I can't even listen to all these conference calls. I can't. In fact, I use ChatGPT with a lot of this stuff only because it's like there's no way I can consume all this information while having a life. Like I take some of these transcripts, I use Earnings Hub, and I look at the transcript on there, but like if a stock is up, like if its stock is flat the next day over earnings, it's like, well, then it's the same thesis, right? But if stock is up like 20% after earnings, it's like, holy crap, they must have said something. I want to know what they said during that earnings call, right? Like Google, it's like, I want to know what they said. And we saw what happened to earnings with Google. Like they're doing amazing, right? Why is Meta down like 8%? I want to know what's happening there. But like Microsoft, it's like nothing really happened. Things going to be flat tomorrow. Yeah. Oh, I'm retired. Oh, congratulations. I'm being retired. Congratulations. I don't even know if like being retired is actually like 60s or not anymore, because so many people retiring in your 30s or 40s. So, I'm not going to ask your age. I'm not going to ask your age, Stephanie. But congratulations on retiring. Hopefully that's a good thing. Hopefully it's a good thing. Yeah, I know, right? Christmas tree. All right, guys. Appreciate you. Gonna sign off 2-hour freaking stream. Wow. I should have been taking timestamps too. All right. Well, take care, guys. Appreciate